Good morning, traders. It is Friday, April 8th. We are about an hour before the open. Let's start with my previous pick, GM. I liked it short. So Tuesday was when that video came out, and I had explained to you exactly what those instructions were. They were predicated on the market closing below the 200-day moving average. This is a daily chart of the SPY, and there is your close below the 200-day moving average. As soon as we got that close, I had suggested that you take a short position in GM. Why? Because you can see the upward sloping trend line that had been breached to the downside. Folks, from the close Tuesday till yesterday's low, that stock dropped $4 or 10% in just 2 days. Excellent, excellent money to be made. I hope that some of you were on that. Again, my market opinion was short. So, excellent trade. Another winner because that's what this system does. Relative strength, relative weakness, but everything is driven by the market. So, let's take a look at what the market is doing currently. We are waffling around the 200-day moving average. You can see the pink line right here. I don't know where the market's going to go. I don't know. I feel that we're at a critical juncture. You could have a bullish flag formation here. You could also see a lower high, double top, and another leg lower. I suspect that going into earnings season, which starts next week, we're going to see a decent bid to the market. Buyers typically are aggressive into earnings season because companies are posting great results. So you typically are going to get a float higher, at least through mega cap tech stock earnings. So until Apple, Google, Facebook, Microsoft, Amazon, until they've all reported, the bid tends to be pretty firm. That gives us a chance to sell out of the money bullish put spreads. Why am I using that strategy? Why am I not getting more aggressive? Because my market opinion tells me not to. We could be up, we could be down, we could be waffling around. I suspect that because of earnings season and because of that alone, the market is not going to tank. That's enough information for me to construct a position around. Now, I need to find really good stocks and I need to focus on selling out of the money bullish put spreads. You can see market closed above the 200-day moving average yesterday, and this morning it looks like we've got a nice little 10, 12, 13 point rally in the S&P 500, so we should see some positive price movement. So let's go in and take a look at some of the stocks that are coming up. TGT. I actually had an alert line drawn for TGT right there, which coincided with a breakout above the 100-day moving average. Actually, my alert was right there. And as soon as it poked out above that 100-day moving average, I knew that I also had a trend line violation that I could lean on. That was bullish. The stock took off. We traded it yesterday in the chat room. I still like it. I like it for selling an out of the money bullish put spread. Retail stocks have been doing fairly well. You can see where the 50-day moving average comes into play, right around the 214 level. Let's call it 215 because this price action is going to eventually drag it higher. We have a nice, beautiful breakout above the 100-day moving average and above horizontal resistance. 1, 2, 3 touches and through. Nice. So that is our first line of support. The 100-day moving average is our second line of support. The 50-day moving average will be our third line of support. All of those support levels make it harder and harder for the stock to fall through there because we know at those levels buyers are fairly aggressive. We also have the market above the 200-day moving average. We also have earnings season starting. So I'm not getting more aggressive with my swing trades because I think as we get closer to that May FOMC meeting, we're going to start to see some selling pressure again because there's a possibility of a 50 basis point rate hike. That is going to be unnerving for the market. So we just want to take advantage of this little reprieve that we have. So a strategy for that would be to sell an out of the money bullish put spread. Well, let's take a look at what we've got there. You can see I've already got target queued up. I like selling that 215 put, buying the 210 put. You can see that that is currently 35 cents bid offered at $1.34. When I do this type of spread, I like to get a $1 credit. That yields a 25% return, and the expiration that I'm using for this is April 29th, well before earnings season. Why April 29th? Well, I want to make sure that I avoid being in April. Middle of May, I want to make sure that I'm avoiding being in May, because by the middle of May, that's when the FOMC meeting is going to come out. That's when I start to expect some nervousness in the market. I'd like the trade to expire by then. And the big mega cap tech companies will have reported by then as well. So I'm going to hover over the E. You can see that 518 is when Target reports its next earnings. So these options expire well before that earnings announcement. So that's your trade of the day. Is I like selling that out of the money bullish put spread 215, 210 for a $1 credit, focusing on that April 29th options expiration date. We might need to see a little bit of a pullback in the stock. So let's take a look at some of the other picks that are coming up. This is on my Pop Bull search. Nice breakout, HPQ, Warren Buffett taking a stake in the company. Still resistant, so I'm not crazy about that. Abbott, I do like Abbott. You can see I've got an alert set above the 200-day moving average. Why do I like it? If you look, you can see this long-term downtrend line that has been breached to the upside. You also have a series of higher lows, meaning that you have an upward sloping trend line. You also have a horizontal breakout through this resistance level. So let's count the pluses for this. Downward sloping trend line, breach to the upside. Okay volume, nothing spectacular. Nice upward sloping trend line. Above the 50-day moving average, long green candle closing through horizontal resistance. Yes, I like Abbott. If you wanted to, you could sell an out of the money bullish put spread, upward sloping trend line, keying off of that 118.50 level. Here's the problem. Hover over the E. Earnings on 420. So you don't have a lot of time between now and the earnings announcement date. So you only have one options expiration to choose from. So I like the stock. This is one that I'll be watching to day trade. Just going to click through a couple of other these. CCJ, very strong chart. Seeing if there's anything else of interest. This is actually pretty nice. PG with a big breakout. You can see downward sloping trend line. That was good. Got through the 100-day moving average, but you can also see very choppy price action. A retracement to the 100-day moving average getting anywhere close like this 157 level, then yes, you could contemplate selling a 155 bullish put spread on that as well. CAH, going to get through this quickly. Love this. Dang, this is a great chart right here. Downward sloping trend line. There's your bullish flag formation. There's your flagpole. There is your downward sloping trend line. Breach to the upside through horizontal resistance. CAH. I like that for a day trade today. Pretty choppy. A lot of tails in here. Would avoid that. PBR. Energy sector, very strong. So there are a couple of really nice looking picks for you. I think Abbott could set up decently for a day trade. I think CAH could be a decent day trade. I think PG on any pullback to 157 could set up a nice bullish put spread. But your trade of the day is Target. I like Target. I think Target's going to continue to move higher. If you are a day trader, you can get more aggressive with Target. All you want to do is you want to make sure that it has that relative strength. Look at these stacked green candles. Once it got through that 100-day moving average, 10P and 10SI also confirming. There you can see the relative strength on a 5-minute basis. Absolutely powering higher. I believe you're going to continue to see strength in it. So any little market pullback, any little dip, you want to see this stock inching higher as the market comes in. inching higher. That's how you know that institutions are in there buying it, because they don't care what the market's doing. They want to own Target. So yes, I would day trade Target as well. Thanks so much for watching. Please leave your comments. We'll see you next week. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.